Hello, good people. Richard here, and we are back to our amazing community. Serve your time. Today, I have a special guest, a friend of mine, and he will speak up more about himself. But he's a venture capitalist, a guy that I look up to. When it comes to matters venture capital, finding the money and investing it right. So his name is Flo, but actually, Flo,
Yeah,
before you introduce yourself,
yeah.
uh, usually this channel is all about serving your time.
Mm-hmm.
Serving your time means that in whatever we do,
Mm-hmm.
I believe, and this
Yeah,
channel believes, this community believes that you're serving your time. It's all about your purpose, your life
always.
purpose, right? Because
Yeah.
I believe, like I said, whether you're a cleaner, you're a lawyer, you're a venture capitalist, you're a marketing person, you're a doctor, all you're doing is serving your purpose. Because at the end of the day, we're all striving to make life a better place.
Yeah.
The exchange for the value is money,
Yeah.
right?
Yeah.
But what motivates us is to serve our time. So,
Definitely.
two things. I'd like you to introduce yourself
Mm-hmm.
and then tell our viewers how you think you're serving your time.
Wow, what a way to start. Hi, everyone. My name is Florent and Richard. Both names just a nightmare to pronounce. I go by Flo. I'm Burundian, based in Kenya. I've been here for 13 years. So, yeah, I love it here. I've done a bunch of things, initially management consulting and then moved into the investment space. Currently supporting an early stage to grow stage fund, investing very early in very innovative ideas in the tech space. I'm really passionate about tech. I like to tell a story. So initially, when I came to Kenya, I used to call my parents, say once a month. I came here long ago. Long ago, I was still young, still had hair. And yeah, I used to
Before
love
the Kipala.
before the Gipara, man. For this Kenya stressed me.
Uh,
So I used to load 1,000 shilling worth of credit, and I'll call my parents for only 5 minutes, right? And then that's it. I was like, hey, mom and dad, see you next time. But these days with WhatsApp calls, I even avoid, like sometimes I even avoid talking to them. They call me all the time. We can talk all the time. And I think that's the power technology holds, right?
yeah.
To look at a problem and really find a solution to an extent that you hadn't seen really.
Yeah.
So, and I think that's really what I want to dedicate my life to, serving my time into finding the next, life-changing opportunity, life-changing technology.
Fantastic.
Mm-hmm.
Thank you. I think that was quite on point.
Thank
So
you.
I know you're a venture capitalist, but we know not everyone else out there. Perhaps there could be guys in the community or our viewers, ladies and gentlemen, who understand what it is,
Mm-hmm.
but we want to assume that majority don't understand.
Yeah.
So if I ask you a simple question, what is venture capital?
Yeah.
And who is a venture capitalist?
Well, it's a very good question. I would say venture capitalists, or venture capital in general, I'll define it in two ways. It's generating extraordinary returns, investing in new innovation. Those two things are very much related. I emphasize extraordinary returns. Right? I really emphasize that. And then investing in new emerging technology. You find it's very, very hard to generate, better market returns without investing in innovation that disrupt the market, right? So yeah, I'll say that's it. Find new technologies, generate a lot of money from it.
Okay. And when you say emerging markets, in 10 seconds, what is that?
Emerging markets is basically poor countries. They don't like to say that, but it's countries that are coming up. So Africa, Southeast Asia. Yeah.
Okay, thank you. And how does exactly venture capital work?
Yeah, I think it makes sense maybe if we start with an example and we just put it into context. So for instance, let's say I want to raise $10 million fund, right? I have this idea and I think I can invest in startups across Africa. I found really good niche. I have a thesis. I'm like, this is my thesis. This is going to generate good returns. And approach a very rich guy called Richard, who's based, let's say, out of the United States of America. And I tell him, Richard, I know you are rich, but I'm going to make you even a richer man. Why don't you give me $10 million? Okay. Richard will be like, okay, let me sit down and think about this, right? I can invest this $10 million in government bonds from the United States. I'll get maybe 4-5% on the dollar,
Guaranteed.
right? Guaranteed, nothing else, right? I can put it in the stock exchange, right? Maybe I can get 12%, right? I can invest in other form of vehicles in the US, maybe get 20%, right? But you, Flo, you are telling me, you want me to give you my money, take it to the riskiest of the riskiest places, which is Africa, emerging markets, right? Invest there, and you know how people think about Africa, whether it's true or not, lack of infrastructure, low tech adoption, right? Purchasing power is quite small, political instability. So there's so many risks associated with that kind of space. But you want me to give you my money to go invest in that country, in those places, right? So what Richard is going to tell me is, maybe I believe in you. I see you are a young man who looks serious, maybe from the appearance, right? You have a beard, maybe you're a seasoned investor. I'll give you the 10 million, but I want 35% annual return, right? It seems easy to say 35% annual return, but it's a lot of money actually, because most likely, if you do the math, after 10 years, if I give you 10 million and I expect 35% every year, to the first year I get 35%, second year 35%, and so on and so forth, it's going to be 4 times the money I gave you, right? So I'm giving you 10 million, right? And I expect 40 million after 10 years, right? You'll be like, okay, 10 years is a good amount of time. Maybe Flo has that amount of time to do it, right? But if you think about it, more, if you break it down, it can be trickier. 10 million, let's say I invest in 10 companies. Startups have a failure rate of 90%, let's say, even higher in Africa. So 9 out of 10 are going to go down. If 9 out of 10 go down, it means I only have one company to generate 40 million.
Oh, okay.
Right? So one company, give them 1 million, I want them to return 40 million. Right?
And that would probably be an icon. Yeah? Unicorn, right?
Right. And we only have.
And what is a unicorn, by the way?
Unicorn is a company valued more than $1 billion.
Okay.
Company, right? So, and you only have most of the time 4 years, because we invest through a period of 4 years, right? And then the remaining 6 years is what we call harvesting period. So, trying to manufacture eggs, so to get back the money, either by selling the company or maybe getting a bigger investor to buy you out, or maybe taking it public to the public markets, to allow other investors to come in. Okay. Right? So 40x, that's the minimum most of the time, right?
That's crazy.
Exactly. So that's why I said at the beginning, extraordinary return. But to get those extraordinary return, you need to invest in technologies that are not there. Okay. Technology, right? Technology. Yes. So
well, actually, we'll deep dive into that. Yeah. But also, before we go in further, I'm interested, or maybe a slight deep dive into you. Yeah. Like, I'm curious, like, how did you find yourself interested in being a venture capitalist, and what specifically drew you into that space?
I wasn't interested, to be fair with you. Man, I just wanted to make a life. I just wanted to have a job. Initially, I used to work for a management consulting firm based out of Nairobi. I'm a French speaker because I'm from Burundi. And they used to send me in the West African side of Africa, so Cameroon, Senegal, Mali. Spent a lot of time there. They were supporting tech companies, right? A lot of these tech companies, and every time I would join a company, the first question they'll ask me is, "Can you help us fundraise? We only have 3 months of runway. We only have 3 months worth of money, right?" So I'll spend a lot of time talking to investors and be like, "Hey, we have this good opportunity," and I'll look at the companies, and the companies look like they made sense, right? They're making money. Yeah. And like, "Hey, we want you guys to invest," but the investors will be like, "Nah, that's not a viable opportunity for us." And in my head, I was like, "These guys are just mean. They have the money.
Why not giving the money?
Yeah, this company are making money, man. It's like, I gotta go on that side now, make the change myself.
Yeah.
Let me go over there and make change.
If you can't beat them,
join them."
That is so true.
So I was like, let me join them and see how these guys are doing.
Okay.
So I went there and I realized these are the maths I was walking you through, right?
Okay.
Like, the expectations are very high for such things. And
if I invest in like I don't know like a juice company in Africa, it's very hard to return that kind of money. It has to be a very innovative technology that is solving a major pain point.
Yeah.
Like if I give you an example, like M-Pesa, right? If I stop a random person on the street and I tell them, today, right now, I'm giving you 1,000 shillings, but you can never use M-Pesa for the rest of your life, they'll say no, because everything in Kenya happens on M-Pesa.
Yeah, absolutely.
Right, on mobile money. So that technology has to be solving a major pain point.
So the value proposition has to be quite strong.
It has to be insanely strong, right? So, and that's why, as a venture capitalist, you need to be very selective in the kind of companies you select, right? Because the growth has to be, they call it a hockey stick, right? So I don't know if you have seen a hockey stick. So it's basically like this, right? So because initially you have losses, and then when there's what they call product market fit, right? And the company has been able to find a niche of customers that really like the product, it just takes off.
In fact, I think you've touched on the question I was going to drop next. I was going to ask you, what would be the requirements of venture capital?
Yeah, before you raise money, it's two main things. Obviously, it depends, because venture capitalists also have different stages. They are pre-seed, seed, series A, whatever, right? But I would say, as a venture capitalist or as a founder, if you want to raise money, there are two things you really need to consider. The first one is the market. Remember, the growth is just very big, 40x. That's minimum actually in the next 10 years to get there, right?
And by 40x, it means 4 times.
Yeah, 40 times the money I get.
Exactly. So, like you said earlier, to get 4 million, you have to produce
1 million. I get 40 million.
40 million.
Yeah, exactly.
It's crazy. But
anyway, so there are two things you need to prove. First thing is a market. It has to be a huge market. Like if you think about M-Pesa, it's the whole of Kenya that is your potential market. The second thing, you need to show that you can execute in that market with a new product. So traction is very important. You come to me and say, hey, I'm looking at 1,000 company, 1,000
potential customers. There's no way I'm going to invest. I need to see like a huge, really big market. That's what they call TAM, total addressable market. And then secondly, you need to see the product. So like this product, I've already piloted it, and you can see I piloted in the same market I want you to, I want to grow in, and you can see the adoption is very high. There are other ways you can measure this adoption, but you can already see that this adoption is quite high. Then let's just give me money, I scale it across the whole market.
Great. So, but can anyone invest in venture capital?
No.
Why not? I have my money, so.
Well, if you have a lot of money, because I think, okay, let's break it down. There's this rule called 220, right? 220 means if I have $10 million, right, every single year I'm going to take the 2 and the 220. I'm going to take 2% of the $10 million every single year to use as my management fees. So management fees is your salary, everything you need to run the fund. So 2% of 10 million, that's 200K. So every year I need 200K, right, for 10 years to run the company, right? That's the first two. The other 20 means of all the returns we make, the investors take 80%, me I take 20% as the guy who manages the fund, right? So the two initially, if you think about it now, if you give me 10 million, right, and I take 2% of that, which is 200K a year, have 3 employees, I pay them, each of them 40K a year, right? That's already 120K. You involve the lawyers, you know how much you guys charge. It's not a very cheap thing. Travel, right? Offices and everything. It's not a lot. It's really not a lot. So what happens is you realize that venture funds have to be, most of the time, a high amount, right? 10, 20 million, 30, 100 million, so that people have the resources to pay their salaries, to run the operations and everything, right? So because these amounts are very high, it also means the amounts to be invested per person has to be also high, right? So if I have maybe like a $10 million fund, it means I have maybe at least 10, 15 people, each of them giving 500K, 1 million. Most of the time, I think, for most people I've talked to, it's like 100K minimum.
Annually.
100K minimum investment for the
Oh,
10 years.
okay.
100K USD is a lot of money, right? So, yeah, it can be tricky.
Yeah, sure. Okay. Fro. So okay. So thank you for that. I think that it's good to know that not anyone can invest, but as you heard from the main man here, if you have 100K USD, and that's I think that's the bare minimum.
Yeah, that's the minimum.
Right.
Yeah.
I think acceptable standard in terms of investment.
Yes.
Yeah. So you had it from the horse's mouth.
Yeah, but I promise you 4 times the money, so don't worry.
It's guaranteed.
Guaranteed. Yes.
Now, actually, on that as a build-up, what do you think are the challenges that startups face in fundraising?
In fundraising, in Africa or in general?
Kenya, but generally in Africa. Let's speak for Africa because that's the market we're playing.
That's the market
we are in.
Yeah.
Emerging markets, that is.
Emerging markets, yes. Good question. I would say in general, I think it's very hard for a lot of Kenyan companies or Kenyan startups to show traction, to show that they have actually generated a bit of revenues.
Viewers, traction means revenue generation.
Yeah, revenue. Yeah, because a lot of founders I meet or companies I meet, they come to me and say, "Hey, we have done these surveys and people need the product, so give us the money again to build it." It's like, you know how many surveys I do every day? Every day I do a survey and I say, "Yes, I need this product," because you want to be kind. Like, no one wants to be a bad person, right? So every time someone asks you, "Do you need the, do you need the, I don't know, like a cleaner?" I was like, "Yeah, I need a cleaner," but it's when it's time to pay, and like, no, actually, I didn't need it, right? So you need actual revenues. People will tell you a lot, but until they pay, that's when you know actually that.
So when we talk of traction, what's the fine line? Do I have to be profitable?
No, profitability.
What is traction in this case?
At this point, actually, to be fair with you, profitability is not one thing that investors really consider. Let me give you an example. Like, think about Uber, which is a venture-backed company, right? Uber does not, they do make a profit on each of the taxis. Like, each trip you take, Uber makes a profit, right? I came here with Uber, right? They made a profit. But it's a really small profit, right? What they need to do is to build huge volumes. So very small margins.
High scale.
Yeah, but very huge volumes to reach that kind of scale, right? So what happens is, to build to that kind of scale where you reach significant profitability, it takes a lot of money. So you have to pump a lot of money and reach that kind of profitability, like that scale, right? So you have to subsidize that growth with investment, right? So profitability, you reach it after a couple of years. Like, for instance, Amazon, which is one of the biggest companies. Amazon is the second biggest company in the world in terms of revenue generation. It took them 20 years to be profitable. Uber took them more than 10 years to be profitable, right? So profitability is down the line. But once you become profitable, man, we're all printing money.
Okay.
Right?
So what you're saying, in traction, and just to make it easy, for the startup entrepreneurs out there.
Actually, to finish on the question, how much traction? Because people usually say, "You guys say traction." I'll say $5,000 at monthly recurring revenue.
Okay.
So every month you have 5,000 consistently for a couple of months. That's a good expectation at a pre-seed level, and then a seed maybe 30,000, and then Series A will be 100K to 500K in annual revenue, in monthly revenues recurring. Right? All these are USD dollars.
So just to take the point home, if your margins, not necessarily margins, but if your revenue, right, before tax, your gross, if you're grossing 5K USD on a monthly basis,
you should start raising a pre-seed.
Okay. And we're gonna come back to pre-seed and Series A. I'd love to
Yeah, should
to learn.
raise like the initial round.
Okay, so that's like the 100K bare minimum we're talking about, right? Or depends. Anyway, it would depend on.
For yeah, you can maybe raise like 300K USD.
Okay.
2 to 300K, I'll say.
And 5K, we're looking at around what, 700,000 Kenya shillings?
5K is around there.
Around there, right?
700K.
Okay, so but what is key is you're having a going concern, and you have recurring revenue.
So that you show these are just sticky customers.
Because I also think that that plays into traction for the investors. It would also mean that you actually have people interested in your product beyond, because money shows people there's value, isn't it? But there are people who are interested in your product.
Exactly.
And that means it can scale with the right amount of investment.
So remember what I said? You have to show just two things: a big market, and you have traction in that market. So this is the traction, the revenue.
Perfect. And just a little bit about the series, the investment rounds. Yeah. So just hit it on it briefly.
So briefly to talk about today's the initial round of funding, right? So I have an idea. I want to connect biscuit buyers to biscuit producers. So I start a marketplace and say, hey, I'm going to be connecting these two sides. And you build maybe a platform. You go to one of these guys, like, okay, this is something good, and then people start ordering online. It's like, okay, this works, right? So I get maybe people in one estate, let's say in this estate, people start ordering. So that's that you have a bit of traction. So you can raise a pre-seed, right? Pre-seed most of the time is family and friends and angel investors, and they're very early VCs, right? People come in very, very right? So that's the pre-seed. Try it with the estate. You're like, okay, this actually works. Let's try it in my neighborhood, right? Let's try it in my neighborhood. Let's say Nairobi. Let's try it in the whole of Nairobi. I was like, okay, this actually works, man. We're doing very well in Nairobi. So you raise your seed. Okay, like this is good. So now let me try it across the country, right? So now you want to do this from seed. Pre-seed to seed are very close. Seed to Series A is a huge journey, right? So
is there a value attached to pre-seed?
It depends really on the industry. Depends, but I'll just say the figures I gave could be used as metrics. So 5K monthly recurring revenue, 15K, 100K to 500K Series A, I'll say.
So 100K could easily be pre-seed?
No. In terms of revenue, so $5,000 per month.
No, but I mean the 100K in terms of the standard,
There's no standard really. Like right now, if you come with like a 500K in AI in the US, it's going to be very hard for you to even raise a pre-seed, right? But I would say generally, you just need to show a few customers. It keeps scaling, and Series A is a huge jump, really, just to show like, hey, we are here. You can't ignore us. We are the guys you have been talking about. So yeah, and you want to cover the whole country, let's say.
And is there like a value? I mean, like roughly for Series A?
For Series A,
for instance, yeah. As the practice, the
amount you raise.
The amount the raise, yes.
I think in Africa, most of the time it's for 5 million.
USD.
Yeah, you're raising 45 million.
And series nowadays, then you got Series B.
Series B, it's more like 10, 20. Series C, Series D, maybe. You keep increasing like that.
Okay. So does it go up to what? Series D? Does it?
There are companies that are raising Series H, Series L.
So those are unicorns, I suppose, right?
Sometimes they're not even yet there. Wow. So it depends on the industry you're building in. Some industries are harder than others.
Okay.
Right? It's like, for instance, if I'm building in like biotech, health tech, right? Those take a lot of time, a lot of research, right, to come to fruition. But the goal is to, after a few series, to go public.
Okay.
Something public. Most of the time companies raise every 18 to 24 months, right? You should be raising. You should get at least, I would say, run rate of 18 to 24 months. So you should have enough cash to run your operations.
The famous runway.
Exactly. Runway is how much money you just need to run your company.
Okay.
Right. So, yeah.
Until the next raise, that is.
Until the next raise.
Okay.
until you close, because that's also happens
Okay.
oftentimes.
Okay.
Most likely that will happen then.
Either you
raise.
close or you break even.
Yes.
Okay.
Yeah.
Fantastic.
Yeah.
So briefly, let me ask you, what do you think generally, especially startups let's say in Nairobi, in Kenya, East Africa, and Africa in general, what challenges are they really? What have you seen as the biggest barriers in them fundraising, generally, briefly?
The traction, as I said,
Mm-hmm.
traction is a huge problem for them.
Mm-hmm.
They don't have revenues.
Mm.
But I think the core thing just boils down to two things: concentration of talent. Like if you think about like Silicon Valley, it's just a group of people talented in certain areas and all concentrated in a small place. I think we don't have that kind of talent concentrated in Nairobi. The reason for that is if you are talented, most of the time you get a job offer to go mature abroad. That's one. Two, Microsoft, all these big companies, Google, they will poach you. And if I come to you and say I'll pay you 50K shillings, and someone comes to you and say I'll pay you 10 times that, even if I promise you to get an exit, we have never seen these exits in Africa. I'm like, nah, leave this one alone. Let me go work for the big company. They'll pay me the big money. This one is paying me in stock, in shares. I don't want that. You give me money. So that's the second thing, right? So concentration of talent is very problematic.
Okay.
And yeah, obviously all the challenges that you all know of, right? Regulation is not favorable. If you want to register like a fintech license, it takes forever, right? Internet connection, all those things. Infrastructure is not yet there. More on the regulatory side, things that the government will cover. Education levels are not as good compared to other places, but Kenya actually is better than other countries in Africa, but still. So I think it's just there's no traction, right, which makes it very hard. Concentration of talent, clearly not here. And then lastly, it's regulatory frame, which is not favorable.
Interesting. Now, how long have you done? 5 years. Yeah. So I would imagine when you're starting, you had certain assumptions, and perhaps along the way. So I'm curious to know what was your thesis? How was the journey evolved? Did you have assumptions? Have they been met?
Yeah.
Or has it been flipped? Yes. Are you somersaulting or what's going on?
I also do angel investments.
Okay.
I invest also my own money.
Okay.
In addition to the fund money, right? So
people need to know angel, but
angel investment is just someone giving you a small amount of money, 1 or 2,000.
Okay.
Maybe 10,000, maximum 10,000. It depends. But
USD.
Yeah. When I initially started, I thought if someone has a very good technology, it will adopt itself. Like it will just be automatic. If I come to Richard and be like, Richard, I have this beautiful solution that allows you to clean your clothes in 5 seconds, you're going to go for it. That's not how life works, my friend. There's this thing called distribution. Distribution is the most important thing, right? You might have the best product, but if you can't reach your customers, it can be problematic. Let's say I'm selling solar panels. I'm selling in Kenya, and I want to sell them up country. How am I going to get to those people in rural areas in Ushago? Right? How? There's no way really, unless I have distribution, unless I have maybe a partner. Maybe I have like distributors who are based over there. We can have a contract and agreement and tell them, hey, you go and distribute my products. We'll have a revenue share. Or you just build your own distribution. You build, and that's expensive. Can you imagine building, like, for everyone who's listening, everyone knows how M-Pesa started in Kenya. They used to have all these agents going around teaching people how to use M-Pesa. Actually, what I've realized recently, a lot of people, to use M-Pesa, they've crammed the process. They might not necessarily understand the steps, but they have crammed the process. I press 1, I put the number. I press 2, I put the amount. I press 3, I put the code. Right? You know how much time, how much effort, how many agents it takes to train all these people to get there? That's the distribution I'm telling you about. Right? M-Pesa might be a great product, but if they didn't have enough money to distribute that product, it would have never worked.
User experience.
It's not just user experience has to be good, but getting to the user.
Because the experience in this case, I'm also marrying it with the ease of use in terms of the knowledge on the user. What I mean is, so like for example, the example you just gave, and I'm really learning here. I would imagine that even a grandmother in Ushago,
They can use it.
They can use it, right?
Not necessarily.
Is that what you mean, or
no? Like,
or you mean how do you reach that grandmother in a way that you're also able to teach them and they can continue to using it without wasting too much time and resources, or what exactly?
Just using it, just getting to that customer. Today I was at a differently abled conference, and they were talking about differently abled.
Different abled, yes.
People with disabilities.
Yes.
That's how they say it. That's the right correct word these days. So I was at the conference, and they're like, I was like, laptops. Why don't these people use it? And I was like, okay. You realize how much effort it takes to know how to use a laptop.
Yeah.
If you can't see, you can use a laptop.
Yeah.
If you can't hear, it's very hard to listen to training videos.
Yeah.
Right. But because you and I are used to using laptops, it looks very normal. Think about the first time you use a laptop, using the mouse, moving the mouse. It's just very hard.
Yeah.
But you got people to train you. It's not because it's easy. It's not because the user experience is there, but it's because you got someone to train you and to help you, to coach you through that, right? And a lot of products are like that. First of all, you need to get the product, right? And then once you get the product, you need to know how to use it. So how do you get the product? So how does M-Pesa reach you, right? Think about, you have internet here. How did this guy get to you? The internet providers. They came to your door most likely, or they called you, right?
So the caretaker, or I asked, but one or the other.
How do they get to you?
Okay.
But imagine if I'm a company of two, just you and I, we start a company. How do you get to our users? Do we go around pitching? And you remember the kind of scale I talked about for venture capital? It has to be huge. It has to be huge. You need millions of users. How do you get to those millions of users? You and I can't go around signing every single person, explaining to them how this thing works. You need to find a way to get to them.
Distribution metrics.
Exactly. Wow. Most likely, it's if you have a partner. Let's say today I have a product, like an app I want to build. Let's say an app, a good app is an app called Bupas. A good friend of mine runs it.
Yeah, the bus one.
Yeah, they allow you bus ticketing.
Yeah.
They allow you to book from here from Nairobi to
I've known about it. Actually, Easy Coach, I think, pioneered it.
Yeah. So Wycliffe and Sonia run the company, right? So, let's say I want to run. They can't go and sign every single person and tell them, hey, use the app. But they can go to Safaricom and tell you guys have the Safaricom app. Why don't we collaborate? You put us on the app, right? You put Bupas is on the app. And then now people can, they open the app. There's Bupas here. I can book my bus ticket from there, right? And that way it becomes easier than going and convincing every single person. So you need to find those hacks that allow you to distribute your product.
So you can scale.
So that you can scale.
Wow.
You can't just go and be like, hey man, today I'm signing Richard. So Richard, tell me, okay, you have your colleague. Tomorrow I'm signing. It will take you trillions of years. We don't have time. Remember, we only have 10 years to return the 40 times of our money. There's no time. There's no time.
That's interesting.
So you need to find ways to scale this product very fast. Who do you partner with?
Yeah.
You might have the best innovation. If you don't get a way to get this product to the market, distribution, you won't make it out here. And that one of the challenges you also mentioned, I didn't mention this, but a lot of founders don't understand these metrics. They don't understand. They're like, you know what? Me, I'm just a tech guy. I just want to sit in my corner,
do my thing.
Yeah, that's not how you understand.
You could have the best product.
If you don't know how to get to clients,
forget.
Exactly.
That's a very good point.
Perfect.
Guys, that actually,
if there's anything you want to take from this discussion,
that is it.
Distribution.
And in fact, that speaks. That's very, even for me, because right now, and we get to that, we are relaunching our Uber for lawyers in Africa, and one of the challenges has always been that. So of course, chicken mouth, technology is one thing. Technology, it has its own ups and downs, right? But then at the same time, you just like you said, how do you then get to the market, and how do you get there fast? more like failing fast. Get there first,
Exactly.
scale fast.
Exactly.
That is a very interesting point. I hope that our
Everyone
viewers
understood.
will, if anything, like
This is the
Flo
only
said,
distribution. A good example, actually, another good example I want to give. It's Microsoft Teams and Slack. Microsoft Teams is a way bigger product than Slack. But if I was to ask you, which one do you think is a better product? Slack is a better product than Microsoft Teams. But why is Microsoft Teams bigger?
Distribution.
Exactly.
Because they have...
everyone uses Microsoft. They will tell you, by the way, of all the 20 products you already buy from Microsoft, we are adding another one. And now you're like, okay, so now I have another product. Should I go buy this Slack? Let it just stay like that.
Same with iPhone and all these other guys.
Exactly, right? So they just put it in the whatever they're already giving you because they already have the distribution. Right? Same for like M-Pesa. If today M-Pesa says, I want to launch money lending, like Fuliza, right? Even if you are lending to people, many people already know Safaricom. It's already on the app.
It's like there's no risk for just continuing with the same old thing.
Exactly.
In fact, our guys think about us.
Exactly. They're thinking about us. So you're like, I leave this already ecosystem that is doing well.
And then I got something new.
No, there's no way I'm leaving.
You must be able to prove to me.
It's so hard now. So now you have to steal customers from others. Distribution is the most important thing. And I've learned that at a very, very pricey cost.
Man, that's a very...
Because we have done investments in companies that are, if I tell you about those companies, you're like, wow, this is magic. These things work in Africa? Yeah, but no one knows about them. So how do you get to this product? Hey,
fantastic. Very good point. Now, just briefly also, I don't know, would be curious. I'm sure one of our viewers there. What's a typical day of a VC? And how do you spend your time, most of your time right now?
Every time I talk to when I used to do a lot of interviews, when I was still in university, and I was doing interviews with companies, companies would be like, there's no typical day for us. Everyone will be like, there's no typical day for us. You're going to be enjoying yourself every day. But most of those jobs are very typical. I think same for actually for VC, there's a bit of a routine, but we spend a lot of time doing two things: finding new opportunities, one, and then two, supporting our businesses. Right?
Okay.
So we support a lot of our businesses in terms of growth, thinking about the growth, a lot of strategy, recruitment, finding the right team members. I told you talent is a huge problem in this market, and then partnership, especially around distribution also, right? Who do you partner with? How do you go? So strategic thinking is very key. So supporting our companies, and then also just finding the next
unicorn.
Inshallah, hopefully soon. Finding the next unicorn.
And do you guys have like specific sectors? Like when one speaks of the emerging markets right now, what are the hot areas that VCs would be keen to invest in?
A lot of VCs are looking at fintech. So, I mean, like fintech, finance is I know you're a lawyer, but finance is the foundation of
everything.
Developing, nation.
Exactly.
Everything, really. So if you figure out your finance ecosystem, it becomes easier. So fintech has also seen a lot of traction. I mean, if you offer anyone, an opportunity to improve their wallet, they will take it. So finance is very important. We have seen a lot of traction in the climate tech space, especially in the e-mobility space. So I think it was today or yesterday that Spiro, which is one of the leading companies, if not the leading companies in the e-mobility, so electric bike space, announced a $200 million fundraise, right? It's a lot of money. So
that would be what, Series B?
That's like Series C or D.
Series C,
yeah.
Okay.
200 million. It's a lot of money, and I hope they can do good use of it.
Is it Spiro or Spire? Or they're like two?
Spiro, or whatever. It's
SPIRO. With like an interesting logo. Yeah, I've seen them around actually, even I think across East Africa. They're here, they're in UG. let's
I
talk
think they
about
also
a bit of
integrate,
because
yeah,
as
many
a lawyer,
countries,
I'll be a bit
they're
selfish.
trying to get in the
Yeah.
industry. That's
I
why I'm
have
saying sure.
I have a keen
Rwanda,
interest
but I
in
think initially,
the legal tech space.
yeah.
And as you might know, as I mentioned before, beyond just in terms of practice, I have really moved more towards tech law. Importantly, I work closely with guys like you. I'm sure you've checked before.
Yeah, we've done a few things together,
You
right?
know,
I don't know if you remember.
I do.
Let's go.
And I'm looking forward.
Hoping to do more.
Exactly. And I'm looking forward to learn because I'm learning. Our farm has actually just strategically decided to take the direction of tech law practice, aiming to be the to-go-to. However, at a personal level, as an entrepreneur also, I'm an investor in tech law specifically with a flagship company in Non-Afrique, which has products that provides that basically I used to use the word Uber for lawyers, but what we usually mean is that we're bridging the gap between law, and the user. Meaning that, of course, with the AI coming very fast and all these things, we are trying to have access to law as easy as it can be. But that's besides the point. The point is, what is your take on legal tech, if anything?
Legal tech has seen a lot of adoption lately, especially since the introduction of AI into the space. The reason for that is law is a sector of very human intense, right? A lot of the work has to be done manually by people writing contracts. But if you look at it, a lot of these contracts are very much repetitive. There are certain areas, I'm sure you can confirm this, that are very repetitive, and a lot of it can be automated, right? So if you look at companies like Legora, Harvey in the US, they have raised quite a significant amount of money to scale the products they have developed in the legal tech space. Anthropic actually just announced, I think like a month ago, specifically a product for lawyers, for corporate lawyers, right? And I think it's one of the places that is going to see huge disruption.
I know LegalZoom is raising billions. I think you know LegalZoom.
Harvey.
That's the
Harvey. Harvey is the one that is
LegalZoom.
I'm guessing.
Yeah.
But Harvey is the one that has raised the most, right? It's a very funny, interesting story. The founder of Harvey sent a cold email to the founder of OpenAI, Sam Altman, just randomly, guy from Sweden, I think it was Sweden, and yeah, he's like, yeah, let's do it. So really? Always shoot your shot.
Code email.
Yeah, but it. That was long ago, and then he invested, and obviously when Sam Altman invests, a lot of people are interested. So yeah, the company has scaled so much in the last couple of years. The question in the legal tech space has always been, or more recently has always been, the fact that a lot of countries have their own jurisdiction, right? How do you now build a product that is able to really address, questions across the board, right? Okay. Have a case in Kenya, it might be, differently handled in Rwanda or in other places, right? But how do you still build a product that addresses all these challenges, right? So data has been a key part. Data has been a key part, ensuring that you have the right data to feed these models. That's point number one. The point number two is, can you build a product on top of the foundation models? So like, if I have a ChatGPT, right? And ChatGPT can do maybe some of the work that a lawyer needs. I can do some bit of research. Do you still need to build a product on top of that? And can people pay for it, right? Or is it going to end up like a Slack, Microsoft Teams kind of case, where you have a product, but people are already using ChatGPT, and they're like, I might as well stay with ChatGPT.
Yeah.
So that's the billion, if not $1 trillion question that we all have to answer. But this is what I want to say. The more we scale our technologies, the more we're going to fight, and the more we're going to go to court. And the more we go to court, the more lawyers make money. So there is huge opportunity in the legal tech space.
Perfect. And just as we get closer to winding up,
yeah,
How do you see AI,
Mm-hmm.
artificial intelligence? Of course, it's obvious, but we can't assume.
Mm.
How do you see it playing, especially in the legal tech space?
Mm-hmm.
Where do you see that living? Is it because there is fear that it's coming for the lawyers, and maybe the work will be out. What's your view?
In 1970s, ATMs were introduced in the market.
Mm-hmm.
When ATMs were introduced, everyone was worried that the job of tellers is going to go away. Because if I can just withdraw the money from a machine, why do I need to talk to someone? Right? Since then, we have more tellers than before, right? Why? What do you think happened? What happened is basically that the more you solve problems, the more humans find more problems, right? The more we find more sophisticated problems, right? So, like for instance, if I want to send money to Burundi, shout out to my people from Burundi. I want it to go at this specific time. I want it to have a certain conversion rate, right? I don't use an ATM. I don't use a mobile app. I need to go and tell her and explain to them all these things because it's a sophisticated transaction. And I think that's what's going to happen with AI. A lot of the work that is boring, that is repetitive, AI is going to be able to handle it, right? But lawyers, just like in other functions, will be upgraded to another level, doing more complex work, more thinking work, more strategic work, I would say, right? And it seems scary. It's scary indeed right now, but I can guarantee you, in the next 5 years, we'll need more lawyers, we'll need more software engineers, we'll need more everything, especially all these white collar kind of work, right? We need everything, more of everyone, and yeah, I think that's actually maybe it's a good way to conclude. But I'll say this is really the opportunity for the continent. As the world finds more problems, as the world needs more human resources, we are the only continent that is growing in terms of population, right?
Yeah.
Europe is declining in terms of population and other things, other metrics. US obviously the same. Asia in some parts. China is not as growing as it used to be in the 1980s and the 1990s. Right, we're the only continent where population is growing at a very interesting rate, right? So let's really take advantage of this opportunity. Really, it's our time to shine, man. Let's embrace it, and yeah,
why not?
Yeah, why not?
Yeah. So, just again, as we seek to wind up, if you were to this maybe like not necessarily a parting shot, but what do you think for starters VCs can do better to be able to speak to the right startups to bridge the gap?
VCs have been called sheep for the longest time because we tend to follow what everyone is doing. I think we need more contrarian investing, more contrarian thinking on the continent.
What do you mean?
If everyone is investing in fintech, a lot of if one or two VCs that are considered leaders are investing in fintech, everyone's going to invest in fintech, right? If someone makes money in this space, everyone wants to invest in that space. But we have already determined that we need, if you are a VC, you need extraordinary returns. That's one way. And then two, very innovative technology. Right? If you see returns coming from one way, most likely that place is already saturated. They should be looking at other spaces.
So are you suggesting, or are you saying rather that
taking more risk?
We have a hard mentality.
Very much, especially VCs. A lot of hard mentality.
There should be more. The risk appetite should be
higher, especially in Africa, which seems counterintuitive because you're like, hey man, Africa is already risky, and you want to take more risk.
Yeah,
that's actually, I think, the only way to make it happen. You need to look at those spaces that no one is.
And why do you think the risk appetite is not as huge in Africa as compared to other jurisdictions such as?
Because things are already it's already a challenge to invest in Africa, to be fair with you. Regulation is not favorable, talent is very hard to find, right? Infrastructure is not yet there, right? Political instability. There's so many, I can go on and on and on.
Okay.
So you're telling us to take more risk? That's what I'm saying. But I think that's actually where the opportunity is.
Okay.
Right? Think contrarian, think about sectors that might not be as attractive right now. A lot of VCs are thinking about the B2B space. I don't think there's a huge opportunity in Africa for B2B.
B2B means business to business.
Businesses, so selling to businesses. A lot of businesses are very informal in Africa. So as a result, I don't see how this can scale.
So we're like more B2C.
I am a huge supporter of B2C, so directly to consumers.
Business to customer.
I'm a huge supporter.
Interesting.
If you think about companies that succeed on the continent, the Money Points, they're either addressing directly to consumers or some form of informal businesses, right? Safaricom, M-Pesa.
Yeah.
Right. They all have some form of either directly to consumers or informal businesses.
Interesting.
Because the formal businesses, you and I, they are very few. The ones in Westlands and Kilimani, those are very few.
The formal.
The formal businesses in Africa are very few. We have 44 million small businesses in the continent.
Wow.
Most of them are just 1 or 2 people operation.
Interesting.
Yeah.
Now, equally to that, what would startups do better to raise better?
Yeah. Every time I talk to startups, the first thing I hear is expectations are too high. You guys have so many high expectations.
In Kenya, kizungu mingi, which means you complicate matters. Just give me the money.
Yeah. Well, not that, but they always say that the expectations are very high from investors. But I always say it's not up to the capital to adapt to the needs of the market. It's the market which has to adapt to the capital. If you are raising expectations have been set, man. You can't be like, you guys bring the bar lower. You have to meet the expectation where they are. Right? So it's not up to investors to change what they think. It's up to you to meet the metrics.
Interesting. Now, I think that we can go on and on and on and on.
I know. We need to do a part 2. Hopefully we can get people to comment and share their thoughts.
And maybe let us know what else we can talk about in the next
that would be beautiful,
version of this particular series.
Sure.
So, if anything, what would be your parting shots to our community?
Build. The future is here. The future is Africa.
The future is now.
Yeah.
Right? Innovate. If you're a VC, think out of the box. Be risk averse. Diversify.
No, risk taking.
Sorry. Be risk. Have a high risk appetite. Don't be risk averse.
Yes.
Don't look at the flow. Everyone is going this direction. Fintech. Just look at. Be open.
Yeah.
More importantly, from this conversation, if you are an entrepreneur, figure out your distribution metrics. That is you know you'll succeed.
Definitely.
According to my good friend here.